What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Tesla, Amazon, AMD, AI, and Netflix. We're going to give you all the levels, including price targets and support points. That way you know exactly where to take profits and where to cut losses on these stocks. And we're going to go over the strategy that we plan to trade on them. So first, let's go ahead and get started by talking about SPY. Whenever we're analyzing a chart, we always like to start with the daily candles because we feel like it gives us a general idea of where the overall chart is trading. In this case, the S&P 500 or SPY has moved back above its 50-day moving average, which is this yellow line here. And we can see that on Friday, markets enjoyed a very strong upside rally to end the first quarter of 2023. Now, what happened last week that caused this move? We had two significant events happen last week. First, we had the Personal Consumption Expenditures, which is the PCE report, and it came in at 5%. So it shows that inflation is still coming down and the Fed's plan to battle inflation is working. So that was automatically good news. Next, we had the GDP report, so the final reading, which is the fourth quarter. It showed that we had a positive GDP of 2.6%. So this challenges the argument that we are in a recession because many people are arguing that there's a recession, that the recession is looming. However, a recession involves two back-to-back negative GDP reports, which we did have in 2022, and they weren't as severe as people thought they would be. And then last week, we had a positive GDP. So now this week, the attention shifts to the labor market. Remember, parts of the recession are negative back-to-back GDP quarters and a high unemployment rate. However, our unemployment rate has been holding at 3.5 to 3.6%, which historically is actually a very good unemployment rate. So the argument for a recession is still being made that it could be around the corner, but so far our economy is acting very resilient to any recession of any sort, which could explain why people are so quick to buy up the market and why markets are making these highs. So don't believe the media, don't believe so much of what the news is saying. Look at the numbers and you'll see that things aren't as bad as they say they are. Now, looking at SPY's volume last week, we see that an extreme amount of volume came in on Friday, and this could point to a further upside move. However, for the last 4 days, we have been gapping up and rallying. Therefore, we can only assume that a pullback is coming. So if you're an options trader, you know that last week on Friday, the quarterly options expired, which could explain why we had such a large upside move. Of course, institutional traders and hedge funds were trying to maximize as much as they can on their quarterly options before they expired. So this week things are likely going to slow down a little bit, and we also have a 4-day trading week. Remember, Friday is a closed day for the market. So this week we have 4 days, and it's likely going to be a slower week than last week. Nonetheless, though, we still have some levels and some targets to focus on. If you are looking for an upside move, you don't really have much of a resistance until 412.95. Remember, us being at these levels can easily cause a short squeeze, and that just means that everybody shorting the market is buying back their position to close out as it goes up. That's why we see that rapid rise and that vertical move up. But with any vertical move up, it gives us the danger of having a vertical move back down, because as things go up, the steeper they are, the steeper they could fall. So going into this week, we have a resistance at 412.95. If we see strong upside volume, then we will play it up to that level, but we will be very careful with our position sizing because we are already overextended. Now, looking at the RSI, which is everybody's favorite gauge to know if a stock is overbought or oversold, we actually look at the RSI in a different way. The RSI is called the Relative Strength Index, and so it measures the strength of a stock. And so if the RSI is trading above 70, that means this upside move is actually very strong. So although it is indeed overbought here, we do see a lot of strength, and we are going to note that every time we take a position. So with the RSI being above 70, we can expect a pullback, but this also shows that there is likely going to be a further upside move coming. And so our pullback targets are going to be right around 406.70 to start. We likely will not stop at 406.70 on the pullback. We are expecting us to pull back towards 403.50 to retest that level at some point this week. If we fall below 403.50, then we have a support between 400 and 401.70. Remember, 400 is a psychological support because anytime you face a strong 400 or 500 or 300 number, there's some kind of psychological support or resistance aspect to it. So if we dip below 400, then things can kind of get messy and the bears could start taking over. If we break below 398.60, then we do expect us to sell off towards 393.70. This is unlikely to happen unless we get some extreme numbers from the unemployment reports this week. So looking at SPY's daily candles, once again, if we look at the moving averages instead of the support points here, we can see that the 50-day moving average is right around 401, which is right around the support point we have here. Institutional traders and hedge funds, they look at the 50-day moving average, which is this yellow line here, to gauge whether a stock is in a bullish or a bearish trend. Right now, we've moved back above that level, so we do expect us to stay in a bullish trend as long as we're above that level, and we are expecting us above 412.95 to move towards 415. And if we want to be really optimistic, we're going to say that we are likely going to go to 430 within the next few months, as long as no news happens that could shift us back down. Now, moving on to our watch list, we have a great selection of names for you, and we're going to go through them. We're going to start with Netflix, where we can see that Netflix, it moved last week, but it lagged behind the market. So although it had a nice move up, it still didn't move up as much as we expected to. And remember, Netflix is actually doing fantastic. Their numbers are looking good, and the company is moving in the right direction. And they've actually filled up this entire drop that they had from a year ago. And so now we are expecting Netflix to move higher. We do have some levels for you. Here are the levels to focus on. So Netflix, to start, we want it to break above 350. If Netflix breaks above 350, then we do expect it to rally towards 360 to 364. Netflix is very well known for large upside moves the moment it breaks out. That's why our price targets are so optimistic and so aggressive. So above 350, we will be longing Netflix towards 360 to 364. Our second price target would be right around 373.90. So if you've never watched our videos before and this is your first time, then what we do here is when the stock breaks out, we will get in and we will set a stop loss just below the breakout. So if we get in at 350, our stop loss would be around 347, 348. The first price target that it meets, we will take half our profits and then we will move up our stop loss, and then we will take the rest of our profits at the second price target, or if the stop loss hits, we would still exit profitable. Now, just like we expect an upside move, we always want to make a plan for the downside move just in case it happens, because nobody really knows what markets are going to do. If Netflix fails and it breaks below its 335 support, then it's going to move back into this box right here. So you can see that between the dates of March 23rd to nearly April 1st, Netflix has been consolidating roughly between 321 to 335, and the fact that it got above that point last week is good news for the buyers. However, if the buyers fail and they move it back below 335, that means people in this box are likely going to let go of their positions because they do not believe in the stock right now. So if Netflix fails below 335, then we will be looking to short it or play a put position down to 330. That would be our first price target, and our second price target would be right around 321 to 322. Now, just like the upside move on Netflix, if we get into a short position or a put position, then our stop loss would be just above this point. So remember, when a support is broken, that support will become a resistance. And so if you're shorting the stock, you don't want the stock to move back above that resistance, or else it's going to hit your stop loss. The next stock on our watch list is going to be AI. So AI is a company that's obviously booming right now, and that's because of the AI craze that everybody's going through. Artificial intelligence may not have the best numbers right now, or it may not have the greatest revenue. However, just the attention around the name is enough to boost it. Let's take a look at its daily chart to see where the overall or the general picture is right now. We can see that AI has gone up and broken above a very strong double top pattern that it formed months ago, and it broke out with a very strong volume. So we can see that that breakout was accompanied with very strong volume. So for AI, our primary goal right now is to watch it above 30. So we want this stock to maintain its 30 support because that was the breakout support. So AI was getting rejected here at 30. You can see that this rejection caused it to move all the way back to 20. And now that it's back above it, that 30, just like we said that support will turn into a resistance, The moment this resistance was broken, it automatically turns into a support. So with AI, we want it to stay above 30. We do expect it to pull back unless there's a short squeeze happening. We do expect it to pull back towards 30. That way it can consolidate and it can breathe before it moves back up. Our stop loss on artificial intelligence, or AI here in this case, I'm sorry, it's called C3 AI, would be right around 27. So if it pulls back to 30, we would take on a starter position and we would slowly add into this one because we want to make sure that it holds this breakout. And so we will slowly add into this, and then our stop loss would be just below 27. If it dips below 27, then it's likely going to fail towards 24. Upside price targets are going to be 36.25. Second price target is going to be right around 40. Now, the next stock on our watch list is going to be AMD. Just like Netflix, AMD lagged behind the market last week. So we always want to find these laggers, especially when there's a large upside move and a stock does not follow, but it holds its levels. So if a stock is holding its levels well, as we can see AMD is, and it's not really following the market up, then it's only a matter of time before it moves up as long as the market keeps its healthy levels. And so AMD has been trading right around its 10-day moving average. Ever since its breakout above 90, it's been consolidating, and that's because it had a large upside move and then it needed to cool down. Just like we mentioned in the beginning of the video, when a stock has a large upside move, it typically needs some time to breathe and consolidate. And so here in this case, AMD has been consolidating for a number of weeks, and it's about ready to go as long as the market stays healthy. Here are some levels that we're focused on for AMD. If you're looking at AMD, you know that the stock has been consolidating between 92 and 102.40. Therefore, this is our primary range in focus. The first resistance we need to break out above is going to be 99.50. Our price target isn't too aggressive to start. It's going to be right around 102. Now, if AMD breaks 102, that means it would be breaking the highest point of this recent consolidation, and a breakout above that point can easily take the stock towards 104 to 105. Now, if the stock fails and it breaks below this consolidation area, then it's likely going to move towards 89. The first support to focus on is going to be 92.80. Below that point, the stock can move to this price target, and the second price target below 89 is going to be right around 85. Next stock on our watch list is going to be Amazon, which, just like Netflix and AMD, also lagged behind the market, but we do see a lot of buying volume in Amazon, and we do believe that this stock is only gearing up to go towards 115 to 120, but we have some shorter term price targets for you. But before we move on to the price targets, let's take a look at the volume. That way you understand what volume accumulation looks like. So here in this case, Amazon for the last few weeks has been consolidating, but if you look at the volume and you pay attention, you'll see that on the green days, the volume has been extremely strong. That means people are accumulating the shares right around this support point. You can see volume here, you can see volume here, and on this day right here, although it was red, you can see this long wick at the bottom, which points to the fact that buyers came in and pushed it off the lows of that day with very strong volume. Once again, you see volume accumulating day over day as the stock starts to move up. And I'm going to show you the same trend with Tesla before the stock broke out. You can see that the stock was accumulating day over day before it had its large upside move. And so we do expect Amazon to do the same in the coming weeks. Amazon's price targets to start, because we don't want to be too aggressive just for the first week that we're looking at it. We're going to be looking at a breakout above 103.50. First price target is going to be right around 105 to 107. If the stock fails and it moves back below 101, we're not going to short it yet. We would short the stock below 95.70 because the stock consolidated between March 23rd all the way to March 30th or so in this box between 95.70 to 101. So if the stock moves back below 101, it'll just move back into this consolidation box and it will likely continue in that box. However, if the stock picks up on selling and it moves below 95.70, then we would consider a short or a put position down towards 92 to 93. Now, the upside price target is to start is 106 or so. If the stock continues rallying as we expect it to, it is likely going to move towards 111 and then it will move towards 120. So there are aggressive price targets on Amazon. It just depends on how long you want to hold the stock, but we do think that it is a buy right now. Last but not least, the moment we've all been waiting for, Tesla. Now, Tesla just reported their deliveries. We can see that right here that they reported an uptick in deliveries, which was a 36% jump from the first quarter of last year. Now remember, Tesla did cut their prices. However, the 36% jump from a year earlier is very, very impressive. And the market last week completely priced this in. We can see that Tesla had a massive jump. So we can assume that people already knew that this was going to happen. Now looking at Tesla, we can see that there's a ton more open interest on the buy side for the calls rather than the put side. Let's take a look. This is the open interest on the puts, and this is the open interest on the calls. And there's obviously a very big weight in the call side. So we have 28,000 in open interest, 16,000, 16,000, 10,000. When we look at open interest, we always like to look deeper into the money because, well, let's be honest, retail traders, they can't really afford $1,500 or $2,000 or $3,000 calls. Most of them are hanging around the $200 to $300 calls. Therefore, you're going to see a lot of skewed open interest on the out of the money calls. But when you go deeper into the money, that's where institutions and hedge funds are buying. So you want to look at the deep in the money options. That way you see where the big money is. And we can clearly see that big money is leaning towards the call side. Now, Tesla is likely going to have some green this week. However, we do not expect it to rally all that much, especially after last week's rally. We do expect there to be a breathing period or a consolidation period. Here are the levels that we're focused on, and we'll talk about some price targets. And so Tesla, let's take a look. Right now it's trading towards 208, right around 208. That's where it finished today. So if Tesla opens below 208, 208 is going to be the first resistance to focus on. If Tesla breaks above 208, we don't expect it to move much higher than 212 to 217 before pulling back. It is very unlikely that the stock will rally all day again because market makers are there to trick retail traders. So if Tesla rallied extremely high on Friday, it's unlikely to make that same move again. So don't be fooled or don't be trapped. If you do get into calls, give yourself 2 to 3 weeks on those calls because the stock is likely going to need to consolidate. Now, Tesla's primary support, we said this on our last video last week, is 200. So last week we said that we need Tesla to break above 201 to move towards a price target of around 212. The stock did indeed break above 201. And so knowing what we know now, the moment the stock broke that resistance turns into a support. And so our psychological support here is going to be 200. If the stock moves below 200, then we expect it to move towards its 195 support. But it's not bearish just yet. Now, if the stock moves below 195, things can get ugly or they can get a little messy, but it's not really going to sell off unless we see it break below 185.30. Below that point, we would consider puts and we would take it to a price target of 176. Below 176, it would go to 162 to 165. So that wraps it up. I hope you guys enjoyed this video. Don't forget to subscribe and like.